Hello, good afternoon. I am CA Yusuf Muhammad, convener of Technical Committee of Karnataka State Co-operatives Association. On behalf of KSCA and Team KSCA, it gives me immense pleasure to webinar on taxation of cooperative society and its recent development. Since this is a webinar and there are participants across India, I would like to give a quick background about KSCA. KSCA is formed in the year 1957. It regularly conducts seminars, conferences, workshops, and study circle meetings of professional interest for its members. It represents concerns, issues, and suggestions of CA fraternity and businesses to various government agencies and regulatory bodies. Any association derives its value and power from the members associated with it. KSCA welcomes you to be a part of this 3,000 plus strong professional group. The online registration for the lifetime membership is open on the KSCA website. I would request everyone to log in, and people who are not the members, please enroll for the membership. Today's webinar is being conducted under the professional series development series. In the past, created a professional development fund for the professional development activities of the members. Many CAs and chartered accountant firms have contributed for this fund, and today's program is dedicated to two such donor firms, that is Sri KY Ningoji Rao and Mrs. Ishwar Bhatt and Company. Moving on to today's session, we have an eminent speaker with rich experience, CA Dr. Venkatesh. He was born in agriculture. He was born in an agricultural family in Chitradurga district, Karnataka. He is a commerce graduate from Mysore University and also a law graduate from Bangalore University. Practicing chartered accountant from 1986. He did his articles in a firm called as MSSV and Company. Later went on to become the partner of the same firm. He was a past president. He was the president of KSCA for the year 1998 and 1999. He's a resource person at various professional bodies like ICAI, KSCA, and All India Federation of Tax Practitioners. He has delivered more than 200 lectures across India. Recently, he is a recipient of Professional Excellence Award from Rotary International. Ladies and gentlemen, let us welcome CA Dr. Venkatesh to take us through today's program on taxation of cooperative society. Over to you, sir.
Thank you. Thank you, sir.
One announcement.
Yeah.
It is to the notice of all the attendees. Please post their question and answers in question and answers tab, Q&A box. Thank you.
Here. Friends, I am very happy to address all of you on this important topic, taxation of cooperative societies, current issues. Friends, when Sriram called me 15 days back, he told me, sir, you have to take one session on this cooperative societies. I readily agreed. It is because my favorite subject, taxation of cooperative societies. Friends, today I want to take you, all of you, for 2 hours on these important issues and what are the challenges before the professionals and what are the suggestions from my end. This is what I want to share with you. Friends, today I want to cover introduction. In the introduction, I want to cover concept and definition of the connected to cooperative societies. And the next is I want to discuss 180 foreign, which is very important. Cash withdrawals, it is applicable to cooperative society. A lot of my friends ask, sir, cooperatives are exempted from this section. Actually, it is not so. Therefore, I want to say this is applicable to cooperative society. After that, 206A, a new provision, which asks the cooperatives to file the return for non-deduction of taxes source in the few cases. That's another is 206 H, which is applicable 1st October 2020, collection of tax at source on the sales made, that I want to discuss. Then 184A. Then I want to discuss return of income 80 under section 80 AAC regarding when you have to file the return. If you are not filed the return, what are the consequences? Then method of accounting. Friends, you know, cooperative society earlier, when they are not liable for income tax, they have to file the return based on what are the basis they want, but it is not permissible. Now, method of account is very important. Under section 145, they have to follow and follow consistently. Next.
Yes, sir.
Very important in cash deposit, demonetization period. Lot of cash deposited by the cooperative societies, and they're paying lots of consequences, which I want to discuss on the demonetization period cash deposits. Next is restriction on cash accepting or receiving cash. There is a lot of restriction under 216 SS or 269T, 216 ST, SU, and the other provisions which are important. Then I want to discuss some of the COVID related issues. Because of that, what are the extension and other things that made, and case laws. Friends, I want to discuss some of the case laws which very clearly say which cooperative society entitled for deduction under ATP, what are the members, what are the class of members should be there to claim this deduction. Next, which I want to discuss with is new form 26AS is effective from 1st June 2020. What are the new form 26AS? What are the details you level? Friends, in this introduction, I want to take you to some of the definition given under the Income Tax Act and the Karnataka Cooperative Society Act and the Karnataka Savarda Act. First, I'll discuss the income tax provisions. Under 2 subclass 31 defines a person. Person means individual, HUF, company, firm, AOP, body of individuals. This is the person definition of the Income Tax Act. If we see the definition very carefully, in this, so cooperative society is not included in this definition of person. Therefore, one of the cooperative society, also it is a cooperative bank, Salem District Central Cooperative Bank, took a plea before the court saying that and the person definition is not, cooperative societies are not included. Therefore, I am not a person under the Income Tax Act. Therefore, I am not liable for income tax. This is a very interesting issue. Finally, Chennai High Court, the Madras High Court, held that no, a cooperative society coming into classification of association of persons. Therefore, it is also covered under section 2 subclass 31 person. Therefore, it includes this cooperative society under UOP. Print, if you see that, next is 2 subclass 19. Cooperative society definition means a cooperative society registered under the Cooperative Society 1912 Central Act or any other law for time being in force in state for registration of a cooperative society. It means if you register under the Karnataka Cooperative Society Act, register under the Central Act 1912, you are a cooperative society. That's all definition. If you register under the Cooperative Society Act or the Central Act, you are a cooperative society. That's the only condition. Under the Cooperative Society Act, cooperative society defines under 2 subclass C means society are deemed to be registered under the Cooperative Society Act. Then cooperative bank means cooperative society which is doing business of banking. Why I am stressing is cooperative bank is a cooperative society. That's what I want to tell you, that wherever you say cooperative bank, you are filing return or you say that it is a cooperative society doing a business of banking. Next is member. Friends, kindly note, this is very important. 2 subclass of the Karnataka Cooperative Society Act defines member means person joining in the application for registration of a cooperative society or a person admitted to the membership after such registration in accordance with this act, rules, bylaws, and includes, kindly note, includes nominal as well as associate member. This is very important. Member includes regular, nominal, associate member, or you can call it a sympathetic member, or you can call it a sleeping member, whatever name you call. Member means who is the person joining the application for registration of cooperative society or a person admitted as a member after registration. Then, as per the rules and bylaws of the and as per the Cooperative Society Act, it is called as a member. It may be a nominal member or an associate member. Under Karnataka Savarda Act, defines cooperative means a cooperative bank doing a business of banking, registered and deemed to be registered under Section 5, and which has the word Savarda Sahakari in the name. Cooperative society means under 2G, cooperative society registered under the Karnataka Cooperative Society Act 1950. This is only same repeat. But you have to see, I told you in the earlier, the under definition person, 2 subclass 31, cooperative society is not included. Therefore, as per the Karnataka constitution, cooperative society is not AOP, they are liable for tax under the Income Tax Act. But if you come to the rate of tax, if you see first schedule, part 1 and part 3, paragraph B, which gives a very clearly separate paragraph for cooperative society, it says up to 10,000 is the 10%, 10,000 to 20,000 is 1,000 plus 20% of the excess of 10,000, and above 20,000, 3,000 plus 30% of the 20,000, and surcharge is applicable if the where income is more than 1 crore of a cooperative society or a cooperative bank. 12% you have to pay surcharge, and education cess is 4%. Friends, from 1st April 2020, 1st April 2020, it means assessment year 21-22 onwards, that is effective from 1st April 2020, rate of tax is 20% to 22% for cooperative society, provided they fulfill the following conditions. The condition number 1 is condition computing income without deduction under Chapter 6A. You should not claim a deduction under ATPG or ATG. Number 2, no carry forward loss is allowed to set off. It means any losses of the earlier year, you want to set up, then you cannot go, you have to go under normal 22% is restricted. What are the income for the year? Don't claim any chapters. Chapter 6A income like ATP, ATG, no carry forward losses, then you pay 22% of the your taxes. This is the condition for the applicability of concessional rate of 22% for under section 150 BAD. This is from assessment year 21-22 onwards. Today, what I discussed is related to the assessment year 1920, 2021 and 21-22. Returned another condition for claiming the concessional rate of 22% taxes in a cooperative society is you have to return to be filed on or before the due date under section 113(1). That is, if it is a tax audit, 30th September, if it is non-tax audit, before 31st July. And for the current year, that is extended only for the you are not claiming the 22% current year, therefore it is not applicable. Once you exercise the option of paying a concessional rate of 22%, that will be continued. You cannot change. Provided once the option is in exercise for any previous year, it cannot be subsequently withdrawn for same or any other previous year by the cooperative society. It is a fixed. Once option exercise, you have to continue that. Friends, I'll come to the other provisions regarding TDS, cash payment. Payment of certain amounts in cash under 184N, which is applicable from 1st September 2019, introduced through a Finance Act 2019. It says any payer, being a nationalized bank or a scheduled bank or a non-scheduled bank or a cooperative bank or a post office, when they are making a payment in cash, you have to deduct tax at the rate of 2% on a payment made to a person in cash. TD is applicable only if the payer paying the sum or aggregate sum in a cash in excess of 1 crore in the previous year for one or more accounts maintained by the payee. It means that any bank or a cooperative bank or a post office, when making a payment in cash more than 1 crore, they have to deduct TDS at the rate of 2%, whether it's from one savings bank account or a different current account. Altogether, if it is more than 1 crore, you have to deduct TDS at the rate of 1%. This section is not applicable if the payee is a government. It means the recipient is a government or a bank or a cooperative bank, post office, white label ATM operators. Any other person may be notified by the RBI will be exempt from this 194N. Otherwise, is liable. Here is a question. Before going to the next slide, I want to tell you, a lot of my friends are questioned, sir, cooperative societies also covered under this exemption clause, means cooperative bank is there. They say cooperative society engaged in the business of banking. That is called cooperative bank. Sir, our cooperative society also doing banking business. Therefore, I am entitled for exemption notified under 194N. I am not liable to be deducted TDS. It is a wrong. Cooperative society is not a only cooperatives is doing banking business as per the Banking Regulation Act. It means you should do banking business. But what our cooperative society is doing is not a banking business. You may call banking business, but under the RBI regulation is not a banking business. Therefore, exemption available under 194N. Notified institution is not covered for cooperative society. Once a cooperative society withdrawing the cash from the nationalized bank or another cooperative bank, they are liable for TDS under 194N at the rate of 2%. CBDT released a lot of circulars, especially press release 30th August 2019. They said that what is the threshold limit of 1 crore? For that, very clearly stated that whatever the cash withdrawal after 1st September 2000, 1st April 2019, up to 30th August 2019, if you already drawn, suppose 90 lakhs, and if you want to draw from 1st September anything, suppose 10, 15 lakhs, then already drawn 90 plus 15, 100 lakhs, more than 100 lakhs is 5 lakhs, and 5 lakhs you have to deduct TDS. That is the interpretation, because this section is applicable from 1st September 2019. Therefore, this they clarified through a CBT and press statement. And they issued a lot of circulars, notification, that is 68, 70, and 80. These are the notification issued in with reference to these sections. These are all the notification number 68 dated 18th September is related to the exemptions applicable to the some new institution notified. Another section notification 70 dated 20th September, very important. This is applicable to the any trader or agent who is operating in a APMCR. He was operating in the APMCR. Is this 194 is not applicable as per this notification. Friends, kindly note, only the trader or the agent who is operating in the APMC notified area. It means you may call the trader, I'm sitting in somewhere else in Shimoga, but APMC are in different place, you are not entitled. Only if you are a trader situated in APMCR and you got a license in the APMCR to do the business, then this section is not applicable. Therefore, you can draw without any deduction under 194N. Another notification 80 is related to money exchange and other things. This is also exempt notified institution for which this 194N is not applicable. Friends, subsequently in Finance Act 2020, there is an amendment to this section 191, which was introduced in the earlier year. Finance Act 2019, amended in 30 July amended in Finance Act 2020, effective from 1st July 2020, it says old provision continues. Whatever the old provision means, that provision it says that up to 1 crore there is no TDS, more than 1 crore 2% TDS. That continues, provided you are a regular tax filer. You are not defaulted in any filing of returns. You are filing regular tax returns. That old provision continues. In case of person who is not filed the return of income for the latest 3 years, previous year, immediately preceding previous in which payment of sum is made, provisions shall apply with a following modification. It means that the person who is drawing the cash and he has not filed a return for any one of the 3 years. Take for example, 31st March 2020 is time for filing return is not over. Therefore, 31st March 2019, 31st March 2018, 31st March 2020. These 3 years, if he has filed the return, then he is entitled for the old provision. It means threshold limit up to 1 crore is 2%. Any amount is 2% the TDS. But if he has not filed for all the 3 years, latest 3 years, or he has not filed any one of the years, then this thing is aggregate amount in cash exceeding 20 lakhs rupees. Threshold limit is 20 instead of 1 crore. Now is 20 lakhs, and more than 20 lakhs up to 1 crore is 2%. More than 1 crore is 5% the TDS to be done. This is the provision. Kindly note, there is no change in this rate. This rate continues. In the COVID period, they announced in May 2020, some of the TDS have reduced by 25%. It means 75% the normal rate. That provision is not applicable to 194N. Therefore, you have to continue at 2% or 5% based on the threshold limit, based on the return filed. This is what the 194N. And also, they issued a circular on 28 July 2020, they said whatever circular issued earlier, number 6870 dated 20th September 2019 and circular number 80 dated 15th October 2019 will continue in the new provision also. Therefore, APMC or a trader who is situated in APMC are still entitled for exemption, no TDS under this provision. We continue that. This is the provision in respect of 184. Friends, I want to leave some space for all of you to have any doubts on the what I have discussed so far. If you have any doubts, I want to take the doubts and then forward to the other sections. I'll request the organizers to tell me any doubts on the section so far I discussed regarding the 194N. Or you want to wait take all the session later.
Sir, as of now, there is no any question relating to 194N.
Okay.
But only one question is there, sir. I will ask. A cooperative society registered in 2018 and filed ITR of 1819 and 1920.
Okay.
Will 194N applicable if cash withdrawn below 1 crore?
Sir, here is what they say is they presume that when the provision they made, they presume that you are a continuing this one. But in your case is you have started the cooperative set only in 2018 and you have filed the return up to date. In my view, even you have filed for latest 2 years, you are not a default under the Income Tax Act. Therefore, you are continued to be entitled for threshold limit up to 1 crore, not the 20 lakhs in your case.
Sir, rest 194A is there. So we will take in next upcoming.
This will take in the 194A, not under this provision. Okay, sir. We'll go to the next is 206A. Friends, this is a new provision. This 206A, a statement of payment of any income to a resident without TDS. Friends, kindly note, if you deduct tax source under Chapter 17B, you are filing the return, quarterly return to the government or the central government regarding TDS deducted and remitted to the government. But this case it says, where you have not deducted tax source for any reason, then you have to file on called 206A. It was there earlier from 1967, but nobody was following. Now they redrafted this in Finance Act 2019 and effective from 1st September 2019. Friends, kindly note this is a very serious provision. Lot of people are defaulters. Cooperative society are defaulted. Definitely they are not filed in return. Now you see, any banking company, it means any nationalized bank, a scheduled bank or a non-scheduled bank or a cooperative society, cooperative bank or a cooperative society. Kindly note, any cooperative society or a public company referred in the proviso 1 of subsection 3 of 194A, responsible of paying to a resident any income not exceeding 40,000 rupees. If you exceed 40,000, deduct TDS. If it is less than 40,000, but you are not deducted because this is less than threshold limit, you are not deducted. Then, where a payer is a banking company or a cooperative society, and 5,000 in case of other cases where you have interest. This means company if you pay more than 5,000 rupees. In case of bank and the cooperative society, if it is up to 40,000, you are not deducting. Then also you have to file this form. In case of a bank, 5,000 rupees is the threshold limit. Up to 5,000 you pay any amount. You are paid less than 5,000 rupees, then it shall prepare such statement in such a form, containing such particulars for such period, verified in such a manner within such time as may be prescribed. Delivery cost to be delayed and said statement to be prescribed on the Income Tax Authority or to a person to be authorized by such authority. Friends, in this case, 206A very clearly says that you are supposed to deduct tax source. If you are not deducted because it's less than the threshold limit of 40 or 5,000 rupees, that is the case you are supposed to file on quarterly return from 1st September 2019. That is exact. Banking company or a cooperative society or a public company. All these three entities are required to file one quarterly return where you are paying interest less than the threshold limit specified under 184A. Then you have to file quarterly return. What is the quarterly return? It says, the board has a power to person other than person when they're responsible of paying any resident income lab for deduction at source to prepare certificate in such form, containing such particulars, all these they have to give. And you can file a correction statement or a rectification certificate you have done any mistake that you can do. 206A, statement of payment of income without deduction tax, your rule 35AC, 35ACA and 35BC, and the form number 26QA and 26QAA is. This is what you envisage under this rule say is, you are having a branch, take for example a nationalized bank, having some 2,300 branches, 4,000 branches. What they'll do is, they'll say all the branches to submit the details of the depositors for whom they are not deducted tax as source. Because it is less than the threshold limit or because of 15G, 15H, less than 40,000, definitely you have to include. And 26A, you have to give the details of the persons in a particular format. You have to fill up on quarterly basis and they'll forward to your head office. Head office has to consolidate all this figure and file one form 26QAA to the central government. That is the thing. Every branch has to submit 26QA and every branch report in maintaining the daily accounts you have to maintain 26QA. After that, you have to file the details in the quarterly return and quarterly return to be filed by head office. You can file these returns on quarterly basis. That is, first quarter June is by July, second quarter by 31st October, third quarter by January, fourth quarter by 30th June. This is the due date fixed for the thing. It means that this is the subsequent quarter you have to file July, October, January and 30th June you have to file the quarterly return in respect of 206. This is a very important 26QA, 26QQA. The branches will submit 26QA to the head office. Head office has to file 26QAA returns to the income tax department. This is the important return and you can file in a particular electronic form, CD form and DVD, whatever this you can follow. All these filing norms applicable to other TDS return also here is applicable. And this is a very important provision. It says that 26A is a very thing. Here is some issues arises regarding whether include SB interest, because I have not deducted TDS. Section starts saying that any person, and if it is a you are not deduct tax as source, whether SB account also included. Friends, kindly note in this section what it says is, read the section. It says that any banking company or a cooperative society or a public company referred in the proviso to 194A subclass. It means that you should be liable to deduct tax at source under 194A. Because of the subsection class A of subsection 3, you are not deducting tax because it is a less than threshold limit. For that cases, you have to file this 206A statement. It means that it is not applicable to sales bank account, which is already exempted from TDS provision. It is not covered. This is what to be very clear. Now, friends, I'll come to the new provision, which is introduced 6 days back, which is applicable from the 10 days back, 6 days back. This is the Finance Act 2020, introduced a new provision called TCS 206C 1H. This is a new provision effective from 1st October 2020, applicable to all the sellers whose turnover is more than 10 crores in the previous year. That is year ending 31st March 2020. Your turnover is more than 10 crores. You have to follow the TCS 206 1H provisions, and every person being a seller who's received an amount consideration for sale of any goods for value or aggregate value exceeding 50 lakhs in any previous year shall collect tax from the buyer at 0.1% of the sale considered exceeding 50 lakhs. Very clear. Here is once your turnover in the immediate preceding previous year is more than 10 crores and you are making a sales to the party and who are making a payment in to you, in consideration is settled and consideration received by you during this year is more than 50 lakhs, then on that you have to deduct 1%, 0.1%, because of COVID relaxation you have to collect at 75% of the normal rate of 0.1%, that comes to 0.075%. Here is some of the clauses exempted. Goods specified under subsection 1, 1F, 1G of 206 is not covered. It means you are already collecting tax of source in other provisions of 206C. You are not required to collect tax of source under 206C 1H. And transaction by any provided by any TDS provision. Take for example, I am a big contractor. I am receiving from the another contractor every year in crores. Whether I have to collect TCS on this? No, because the payer is going already deducting TDS under 184C. Therefore, these TCS provisions are not applicable. Export sales, it means you are exporting out of India. Therefore, this is not covered under TCS provisions. And buyer is a central government, state government, or an embassy, I commission, and legation commission, consulate, trade representative of a foreign state, local authority, any other entities noted by central government is not liable for TCS. Now the question arises, these are the question I am posing to you. Tell me whether seller should collect tax and receipts from the April 2020 to September 2020 because you have collected substantial amount during this period. Next, whether the basic exemption of 50 lakhs, meaning whether tax to be collected only on in excess of 50 lakhs in a financial year, whether threshold limit collection of 50 lakhs is to be reckoned from 1st April 2020 or from 1st October 2020. These are three questions I am posing you because the new provision, you have already in your mind these issues. I want to take first issue. Whether seller should collect the tax and receipt from 1st April 2020, 30th September 2020. I already told you this provision is applicable to 1st October 2020. Therefore, whatever collection you have made from 1st April 2020 to September 2020, it is not covered by TCS provision. Therefore, you are not necessary to collect tax at source. Next, there is a basic exemption of 50 lakhs, meaning whether tax to connect only in excess of 50 lakhs. Yes, it is very clear, only in excess of 50 lakhs. The collection during this accounting year, April 2022, this and collected subsequently 1st October 2020, when you, for the calculation threshold limit of 50 lakhs, you have to include the collection made from April 2020 to September 2020. If it is already in 50 lakhs, whatever the amount you collect now, on that you have to collect 0.1%. Friends, you will point arise because you are not raised this in an invoice. You are not included in the invoice. Now you are collecting. Now is very clear, whatever the amount you have collected now, after 1st October 2020, you are supposed to collect TCS and remit to the government. It means you have to collect from the buyer. But you are not collected because in the invoice of the earlier period, you are not raised any TCS. Therefore, they allowed in a circular saying that all the sellers have to raise a debit note to the buyer for the TCS not collected to the earlier period, but you are collecting now and exceeded 50 lakh. Then you have to raise a debit note and collect the TCS at 0.075% and remit to the government. This is what they allowed under the circular. They say you have to raise a separate note. But if you are raising now, already this person has already exceeded 50 lakh, then in the invoice itself, you have to add 0.1% for the invoice value plus other charges, insurance, GST all together. On that, you have to raise the GST, sorry, TCS of under 2061H at 0.075% and invoice as a line item. Next is whether threshold limit to be calculated record from 1/4/2020 or 1st October. Very clear law. It is applicable for the previous year. It means from 1st April 2020 to September 2020. Already you raised invoice and collected 50 lakhs. Then you from 1st April, 1st October 2020, whatever the amount you collect, on that you have to collect TCS of 0.075%. If you are not to take, for example, in the invoice rise,
I think there's an outage from the speaker's end. We are trying to fix it. Please bear with us for 2 minutes.
Is it okay?
Yes, sir.
You have any questions on this 194 N20 206A? You have any
Sir.
questions? I think a lot of questions are raised.
Yes,
See
there
whether-
there are questions. Does the district central cooperative bank need?
I'll take that issue later, sir.
Okay.
That is 194A. I'll take later.
Yeah,
Okay.
194N. If assessee is not liable to file return of income, section 194N applicable?
The assessee is not liable to means.
I think he is understood from the individual perspective, individual person.
Sir, it means if he is not filing return of income, okay,
Yeah,
he is not required to file the return of income, whether 194N is applicable. I am very clear it is applicable if you draw cash more than 20 lakhs. You have to deduct TDS under 194 and at the rate of 2% up to 1 crore. More than 1 crore, you have to deduct 5%. Because you have not filed the return. What is maybe reason? Your reason may be not filed because your income is less than the tax limit. Fine, excellent. But you are not filed, then the provision is very clear, mandates that you are not filed the return of income for any reason. We don't know what is the reason. If you are not filed, then the threshold limit is 20 lakhs. If it is more than 20 lakhs up to 1 crore, 2%, more than 1 crore is 5%. Very clear, sir. There is no one exemption talk.
Sir, next one. All cooperative society has to file return under section 206A even when they are not deduct TDS on member deposit.
Sir, if it is a more than 40,000 rupees, sorry, it is less than 40,000 rupees and he is not required, I'll come to the cooperative deduction. But anyhow, I am telling if you are not deducted for any I am not liable for TDS, but the exemption is not notified under.
Sir.
Tell me, sir.
Sir, your answer was not clear because due to connectivity.
Sir?
Connectivity problem. Your answer is not audible due to connectivity. Can you once again repeat the answer, sir?
I'll repeat. 1 minute, 1 second. Sir, now there is a question is raised. There is a question raised by one of the viewer is, one is, first question, I think you are clear, audible, regard assessee liable to file the return of income, will section 194 is applicable. I am very clear, even you are not filed the return of income for any reason, you are not filed the return for the latest 3 years, then your threshold limit is 20,000, more than 20,000, you have to deduct TDS at the 2%, 1 crore, more than 1 crore, 5%. That is very easy, clear. And respect of all the cooperative society has to file the return under 206A, even though when they are not liable to deduct tax under member deposit. They are very clear under 184A, subclass 3, subclass 5. It says that any interest paid to a member is exempted. Correct, sir? Under 184A, subclass 3. I'll read the section and I'll read 206A. Under 184A, subclass 3, it says under 184A, subclass 3.5, it says such income credited or paid by a cooperative society to the member thereof, or such income credited or paid by a cooperative society to any other cooperative society, TDS is not there. when you pay interest to a member or to another cooperative society, TDS is not there as per class 5 of the 194A subclass 3. But if you read the 206A new provision, it says very clearly, only if you are covered, this is very interesting, 206A, it says any banking company, cooperative society or public institution referred in 1.3 responsible for deducting not exceeding. This covers section 194A subclass 3 subclass 1. 5 is not covered. Therefore, I am of the view, even though you are not deducted TDS because exemption given under 5, but the 5 is not covered here under 2. Therefore, my view is take case also you have to include under this 206A return and file the return to the government. That is what my view is, sir. But if they give an exemption only for 194A, subclass 3, subclass 1. But they should have excluded even 5 also. Then if it is 5 is excluded, then cooperative society, this question will not arise. You would have given exemption. But it is not included today under the exemption clause. In my opinion, 206A is applicable to the cooperative society, interest paid to its members.
Sir, much of the so I mean, rest of the questions are relating towards interest. So we will take in further slides, sir. On interest payment.
Okay. I'll take up that later. Now we'll move on to the new provisions of 194A. I'll take all the provisions of 194A. Then you'll take up these issues. Okay. Now is 194A, the new provision. It says that next. Sir, I want to take up what are the amendments 2-3 years under in Finance Act 2018. Limit for senior citizen is increased to 50,000 2008. What I mean a senior citizen means, they say senior citizen means an individual, whether male or female, a resident in India, who is of the age of 60 years or more in any time during the previous senior citizen, the threshold limit for reduction under 195A is 50,000. And in case of threshold limit increase from 10,000. In case of the general threshold limit is 10,000 from 10,000, and 3 threshold limit for senior to 50,000. No, Finance Act 2020. This is a very important provision. Cooperative society with the turnover exceeding in the immediate preceding financial year are required to deduct taxes so 10% in excess of 40,000 or 50,000 in case of syndicate. It means on 1st April 2020, it says we also have to deduct on the interest payment to members if the turnover of this cooperative society exceeds the immediate preceding previous year. It means for year ending 31st March 2020, the turnover of this cooperative society exceeds 50 crores. Then they have to deduct TDS at 10% on the interest in or 15,000. It means 40%. This now question is what about cooperative society? Friends, turnover means what are the receipts appearing in the income expenditure account? It means interest received, miscellaneous receipt, society sales more than 50 crores. Then original continue and deduct only if it is number to deduct, otherwise number is not attracted. This is a new introduced from the Act 2020. Applicable assessment year 21-22 onwards. Another short limit now I want to summarize for a normal person where there is a banking company for which Banking Regulation Act is applicable. Where is a cooperative society in the carrying a business cooperative bank, and 40,000 on any deposit in post office, 5,000 in case of other cases where public. In case it is this instead of 50,000, 2019 onwards, 1% because of code reasons. What are TDS related to this year? What are TDS you have to pay after 14th May 2020 up to 31st March 2021? You have to deduct 70% of this rate, that is a 7.5% of this TDS. Now the question is, somebody is raised already a question on this, whether cooperative banks pays the interest to the other cooperative society, whether they have to deduct tax as source. Friends, kindly note, the cooperative bank paying interest to another cooperative society is a very important after 1st June 2015. When the Finance Act 2015, they made very clearly all cooperative banks pay interest to deduct TDS under 194A. Now this section said that 1st July 2015 onwards, the interest members they have to deduct TDS if it is more than 40,000 or 50,000. But in this case, when a cooperative bank paying interest to societies, maybe credit cooperative society or the housing cooperative society, or when you are paying interest by cooperative bank to cooperative, as explained in the memorandum of finance 2000, which is notified November 2015, it says very clearly no TDS to be deducted in respect of interest paid by a cooperative bank to cooperative society. This is only in case of cooperative bank interest to cooperative societies. Yes. What happened? Start or not start? How many people are there?
The voice is breaking. Sir, you'll be able to hear now? Yes, sir, it is audible.
Yes, it is audible. You can do one thing, sir. You can stop your video and you can share the content. No problem.
I'll share the content later, Mr. Sriram. No worries.
No, sir. On the screen, you can share the content. You stop your just video because for the low bandwidth, the internet connectivity problem is there, I think.
Okay, it is not from my side. It is a problem from your side.
Internet.
Okay, Sriram, now is another slide regarding 184A.
Yes, sir. Yes, sir.
Earlier threshold limit 10,000, now it is increased to 40,000, 50,000 for each branch wise. From 1st July 2015, in case of banks, it is not branch wise. It is a now, if a bank is having a core bank solution, threshold to be calculated for the bank as a whole, not branch wise. This is a very important. In case of a cooperative society having a lot of branches in Karnataka or anywhere in the country, and they're making a payment to the members, and they want to deduct TDS if the applicable TDS is applicable, then they have to do branch wise or the cooperative society as a whole. If they have a core banking solution they have installed, then this provision is applicable. If they don't have a core banking solution, then they have to deduct threshold limit each branch wise as a cooperative society. But bank as such, yes, very clearly says that before December 2000, I think 16, they are all core banking solution. Bank is no option. They have to deduct TDS based on the threshold limit as a bank as a whole, not as a branch. Earlier, time deposits and term deposit does not include recurring deposit. From 1st June 2015, recurring deposit also called as a time deposit, and you have to deduct TDS on the interest paid exceeds the threshold limit, including the recurring deposit interest. This is the change. Now, question to you now. Visible? They are visible?
Yes, sir. It is visible, sir.
Visible, sir?
Yes, sir. It is visible.
Okay. Now, this is slide. I make some questions to you. When a cooperative bank paying any interest to members, deductees or members, whether you have to deduct TDS or not. You have to deduct TDS from 1st June 2015, very clear. A cooperative bank paying interest to any member, if we exceed the threshold limit of 40 or 50, you have to deduct tax source and at 10%. This is very clear. Next, cooperative society paying to any member or any other cooperative society, no TDS. But if a cooperative turnover is more than 50 crores for the year ending 31st March 2020, for 1st April 2020, they had to deduct tax at source under 194A. Exemption specified under 194A, subclass 3, subclass 5 is not applicable. When a cooperative bank paying to cooperative society, no TDS. Friends, I told earlier already, memorandum to the finance bill 2015 is clarified saying that any interest paid by a cooperative bank to cooperative society, you are not required to deduct taxes irrespective of the amount. In a cooperative bank paying interest to another cooperative bank, it is a question mark. First three questions I already answered. Yes, no, no. But in case of a third, fourth question, cooperative bank paying interest to cooperative bank, whether you have to deduct tax as source is a question mark. My view is very clear. When a cooperative bank paying to another cooperative bank, no TDS because as per section 194A, subclass 3, it says very clearly recipient bank or recipient person is covered by the Banking Regulation Act. These TDS provisions are not applicable. In this case, a cooperative bank who receives the interest from another cooperative bank covered by the Banking Regulation Act 1957, no TDS is to be made. When a cooperative society paying to a cooperative bank, also not required because recipient is covered by the Reserve Bank of India Banking Regulation Act. Nationalized bank paying to cooperatives is a very interesting question. I told you earlier, cooperative bank paying interest to cooperative society is exempt from TDS because there is a clarification given in the memorandum to the finance bill. But that type of clarification is not there for a nationalized bank paying interest to cooperative society. My view is nationalized bank has to deduct TDS under 184A, amount exceeds that threshold limit of 40,000, you have to deduct for the cooperative society. And nationalized bank paying to cooperative bank exempted because this cooperative bank receiving bank is covered by the Banking Regulation Act, TDS provisions not applicable. This is the thing I wanted to share with you under 184I. I think a lot of questions are raised on 184I. I want to stop and ask the questions now to interact with you, say that whether these provisions, what is your view or what is your questions on the 184A.
Sir,
Sir. Sir.
Is Sir, does a district central cooperative bank need to make TDS under section 194A on interest paid to cooperative societies?
Sir, the district center cooperating paying to cooperative society, district center cooperative bank is a cooperative bank. At any stage, in the memorandum bill Finance Act 2015 is very clearly said that cooperative bank paying to another cooperative society, no TDS is required. No TDS is required. I think I request Narendra KV, you are clear about this, sir? You are clear, Narendra? Is not able to. Okay. Clear, sir? Cooperative society is not. When you are paying interest to cooperative society, you are not required to deduct TDS under 194A because the memorandum to the Finance Bill 2015 clarify that any cooperative bank, central cooperative bank is a cooperative bank. Any cooperative bank paying interest to cooperative society, that cooperative society may be a credit cooperative society, primary agriculture cooperative society, or any other housing cooperative society, exempt from TDS provision as per the memorandum to the Finance Bill 2015. Next is cooperative society has to file the return. Okay, you have to file the return. Already explained. And whether interest paid to member is liable for TDS. I told you very clear. When a cooperative society paying to a member means who is a member in the register of members. See, for that is also very clear. As per Citizen Cooperative Society, member means only regular member. As per the Supreme Court decision of the Citizen Cooperative Society, it says that only regular members are the members, not the nominal, not the associate member. I am not agreeing with the great respect to the Supreme Court decision. Our Karnataka Cooperative Society says that members includes regular as well as nominal as well as associate member. Therefore, in Karnataka, if you are paying interest to nominal member or associate member or regular member, you are entitled for exemption. You are entitled for exemption under 194A. You are not required to deduct tax at source, irrespective of the amount. Whether below 40,000, 5,000 case maybe. So next question asked by Vijendra. He say if he is below 40,000 or 5,000 as the case may be, What about the 40,000?
So that is with respect to 206 years.
Sir, actually, I want to tell you, that's what I brief. Once again, I'll repeat. Sir, under 206A, it says that you are liable to deduct tax at source under 194A, subclass 3, subclass 1. It means amount exceeding 40,000 or exceeding 50,000 or exceeding 5,000 rupees, you are required to deduct tax at source. You are required. But if it is because this amount is less than 40,000, you are not deducted tax at source. That is the case, you have to file 206A. But interest paid by a cooperative society its member is exempted under 184A subclass 3, subclass 5. Any amount is exempted from TDS. But under this provision, it says once if it is a less than 40,000, you are not deducted, then you have to file 206A. But if you go to 206A, is a very clear, you are not deducted tax at source. If you are not deducted tax source for any reason, and which is not covered by 194A subclass 3, this threshold in 40,000, in my opinion, then you have to file for this member deposit also if you are not deducted taxes. So I think that is the view. You have to take it to the purpose for which this 206A is introduced. But in the memorandum or the notes accounts is not clear about this provision, but this is only my personal view. But you have to read and take the view, whatever is convenient. But all this is purpose you have to see. 206A, how we introduced, person for whom you are not deducting tax source, they want to see linking that whether you are liable to file the return, and you file the return but you have included or not this income. And that is the case if you are deducted tax source is automatically appears in 26A. But if you are not deducted, at least you appear in 206A return. Therefore, this interest will be liable for income tax. Definitely, this interest received by a cooperative society per paid to members, a member has liable to pay tax. There is no exemption at all. Only TDS is exempted, but income tax is not exempt. Therefore, you have to include. Go beyond the purpose of this 206A. I feel when you are not deduct tax at source for any reason, then you have to include even though his amount is more than 40,000.
Yes, sir. Next question. Should be considered to reckon 20 crore turnover?
Sir?
Whether interest received should be considered to reckon 20 crores turnover?
50 crores, not 20 crores, 50 crores.
50 crores. Yes.
50 crores. Sir, under this provision, whatever I discussed regarding this turnover, under 184A, exemption it says if you are less than 50 crores, old provision will continue. Whatever interest paid to members is exempt from TDS provision. That is the law. But your turnover for the immediate preceding previous year, that is immediate preceding for financial year 2021 is 31st March 2020, exceed 50 crores, 50 plus, exceed 50 crores, then this exemption under notified under subclass 5 of 194A is not applicable. You have to deduct taxes whether a member deposit, whether a regular member, associated member, or nominal member, you have to deduct taxes at the rate of 10% or now is 7.5%. That is the provision in respect of this turnover. Turnover means whatever the receipts in the income and expenditure account, that is the interest receipt plus safe deposit lockers in the interest, appraisal fee, miscellaneous receipt. Suppose the cooperative is doing trading in any commodity, that is turnover. That also will include total together is more than 50 crores. This from 1st April 2020, TDS provision 124A is applicable. Even though interest paid to members, you have to deduct taxes. So this is what the new amendment to 194A subclass 3 is. Yes, sir.
So there is a capital gain question.
Capital gain.
Is capital gain for a cooperative society business income, or it should be shown as a capital gain? The sale of property is not to a member.
It means the cooperative is selling a immovable property.
Yes.
Which is a long term. Is a long term. You have to presume is a long term only.
Yes.
Otherwise,
Yes.
the short term means is a business rate. It is a long term. Then the whatever the tax applicable to capital gain that will be paid, ATP deduction is not allowed. Means you have to pay tax at the rate of 20 plus surcharge if is applicable plus education cess you have to pay separately. Capital gain is subject to a separate rate of tax under 115 AA. That tax you have to pay. That tax you have to pay, not the normal tax specified under paragraph B of the first schedule. It is a different tax rate. That you have to pay. Yes, sir.
Next question is already answered for you, but for the clarity, I am asking once again whether TCS is required to be collected on collection pertaining to earlier years.
I'm repeating again. Sir, whatever the sales made, it is not this 184, 206, 1HA is applicable on the collection, not on the bill raising. You may raise a lot of bills, crores together, but you are not collected, this TCS is not attracted. What they say is, whatever the amount you collected, 1st April 2020 to September 2020, plus 1st October 2020. Whatever you collected from April 2020 to September 2020, already more than 50 lakhs. Whatever you collect from 1st April to 1st October 2020, already collected earlier is more than 50 lakh. Whatever you collect now, on that you have to collect TCS at the rate of 0.075% at the present rate. But you have collected sometime in April to September. So take for example, you have collected 30 lakhs. In October, you have collected around 25 lakhs. 40 plus 20, 55. 50 is exempted. 5 lakhs you have to collect 0.075% and remit to the government. Because these are all the invoices raised in the earlier period, maybe related to the earlier years, but collection are made during the year. You have to raise a debit note to the buyer and collect from him and remit to the government. But if you are raising a bill now, anyhow from 1st October, and you know this party for whom you buyer you are going to sell more than 50 lakhs in a financial year, better you put it as a line item saying that this is the invoice value, this is a freight, this is the transportation all together plus GST, and on that you collect 0.075% as a TCS mentioned in the bill itself. So that is very easy. When you collect this amount, you are collecting including TCS and remit to the government TCS of 0.075%. That is the view, sir. Any question on this again?
Sir, one question is there.
All are interesting question only. Sriram, all your questions are very interesting. Tell me.
Payment made to Zoomers through the credit card of secretary during the current year, is TDS applicable?
It is more than 50 lakhs in a year?
No, sir. See, the question is, the payment is done through the secretary credit card, not the society credit card or society account.
Okay.
So, in that case, whether TDS is applicable?
Whether 206C, which provision 206C, 1H or which provision are you talking about?
I think they are asking about the software related or AMC like that, sir. Zoomers.
Sir, 206 one is related to alcohol, tender leave, timber, other things. Okay, it is not applicable. Sir, next is 2 will be responsible to the thing. C is every person. The parking lot, toll plaza, mining and quarrying. Sir, 1G refers to the dealer of a remittance India, buyer being a person remitting the foreign currency out of India. So that for this is more than 7 lakhs rupees in a year. They have to collect TCS, whatever the rate is prescribed. If it is less than 7 lakhs, no TCS. More than 7 lakhs, you have to collect TCS. Sir, that is a 1G. Sir, next is 1H. In the one case of 1H, total collection from you. See, your seller or buyer? You tell me straight up now.
Sir, they are asking about, I think, 194C or 194J, sir, about TDS applicability. Payment towards the Zoom.
That is a service providers.
Yes. Service
provider. 194C is applicable. Is
but
not
the payment is
194C is applicable, not 206CH.
Okay, sir. But the payment is done through the secretary account, not through the cooperative society account.
First thing is where it is debited, sir. That you tell me. Payment don't go to payment. Where it is debited? Whether in the books of cooperative society or in the books of secretary?
No, because it is in secretary from the secretary account, but they may pass the journal entry in the book, sir.
Correct. Once a journal entry is passed and 194C is where is more than threshold limit of 30,000 rupees in a year, whether paid by a secretary, paid by a president or paid by somebody, no relevance because you have passed the entries in the books. Once you pass the entry in my books and amount is more than 30,000 rupees, you have to deduct TDS under 194C or 194J. Technical services 194J, 194C is 1%, 194J is 10%. But in some cases they say in respect of electronic consultancy or consultancy related to the digital, there is a professional advice and you have to deduct TDS under 194J. In this case where Zoom payment, I feel it should be deducted TDS under 194C or 194H and you have to remit to the government. Debit to the profit and loss account is very important. Payment is not the criteria. Actually, they are paid for the convenient purpose secretary or a president or this some other account, but it is debited to profit and loss account. Then this is the TDS provisions are applicable. You have to deduct TDS under 194C or 194H. My use deduct TDS under 194H. No issues arises on that. No issues.
Sir, still 6 questions are there. So let me complete the session and then we will take the questions, sir.
Okay, you know which are the questions already answered, which are the questions pending now?
Yes, yes, yes.
Otherwise it will be an issue. Okay?
Yes, sir, yes, sir. No problem.
Okay, we'll go to the next.
Okay, okay.
So next is, sir, next slide I put here is question to all of you. A member of a cooperative is doing a business and subject to tax administration 44A. He has taken loan from a cooperative society, 25 lakhs, and is paying and for his business and is debiting interest to his profit and loss of 2.5 lakhs. Whether member has to deduct TDS under 194A or not. Friends, why I have taken this issue is, cooperative society when paying interest to members is exempted and exempt from TDS provision. In case is reverse, member is paying to cooperative society, no exemption of this nature. Therefore, you have to deduct TDS under 194A at 10% on whatever the interest paid to the cooperative society and remit to the government. There is only exemption. Only a cooperative bank or a paying to interest to cooperative society exempted, not to the member, not to the member. Therefore, I want to distinguish this issue. Therefore, I framed this issue for you. Next is, friends, section 44EB, very interesting. Tax audit. Tax audit is applicable to cooperative society also. When a turnover exceeds 1 crore, they are liable to do the tax audit by a chartered accountant and file the tax audit return, file the tax audit report, and also income tax return before specified date. For the year ending 31st March 2020, the due date for filing tax audit report is 31st October 2020. You have another 24 days to file the tax audit report, all cooperative societies, and file the return before 30th November. Kindly note this year, friends, you have to file your report immediately. File your report immediately before 1 month earlier to the due date. After the return, you can file later. Earlier, we should do both simultaneously. Tax audit report, and now the due date for filing tax audit report is 31st October. Due date for filing your return is 30th November. This is a due date. Kindly note for the year ending 31st March 2020. This is a due date. One thing which is a new provision introduced from 1st April 2020, it is applicable for assessment date 2122. It says any society or any person carrying a business and his total sales or turnover, gross it as a case may be, in the business, as a case may be, in a business exceeds 1 crore rupees in a previous year. Provided in case a person more than 1 crore, tax audit is compulsory. Fine, excellent. But in case of a person who is aggregate amount received, including amount received in sales, there is a turnover or a gross during the previous in cash. Kindly note, friends, here is person who is doing business, his turnover is more than 1 crore, but he received in cash, does not exceed 5%. It means total receipt or a turnover is substantial, more than 1 crore, but he is not received anything in cash. All his check payments and the cash received is very meager, but does not exceed 5%. Like manner, all the expenditure payments made for the expenses incurred also during the year does not exceed 5% of this total payment. Then turnover for the turnover limit or threshold limit for tax audit is 5 crores. If it is more than 5 crores, then only tax audit is compulsory for the persons who fulfill the condition. It means the normal person is more than 1 crore, tax audit is compulsory. But if a person who is doing everything in check transaction or small cash does not exceed 5% of the total turnover, or expenditure does not exceed 5% of the total expenditure, then a turnover for purpose of tax audit is 5 crores with effective from 1st April 2020 for assessment year 21-22 onward. This is only just for the information. This is for the current financial year. This is a very important due date for filing return of income. I told you 139 prescribes the due date for filing return. For return filing, due date is 30th November 2020 for the year ending 31st March 2020. Tax audit report filing due date is 31st October 2020. Friends, very important provision introduced under 80AC. Deduction not to be allowed unless return is furnished with the effective from 1st April 2018. Finance Act 2000 introduced a provision called 80AC, in which says a deduction not to be allowed unless you file the return within the due date. Within the due date, it is there from last 2 years. Lot of cooperative societies are thinking that they can file anytime return, not to bother claim 80p deduction. Now, friends, is not possible. As a professionals, you have to tell all the cooperative society you want to claim 80p deduction, file your return within the due date. Otherwise, you are not entitled. I have filed a lot of appeals where the cooperatives filed the return after the due date and the assessing officer rejected their 80p claim and demanded huge tax. But this to be noted, and all the professional, please advise your client, file the return within the due date. Don't wait for the last minute, file immediately. If the audit is over, complete the tax audit and file your return before the due date so that you are entitled for the 80p deduction claim. Otherwise, you're losing your 80p deduction. This is what 2006 is for the deductions claim under any of the provisions. From April 2006 to 2018, this is the provision 80IA, 80IB, and it. Now is from 1st April 2010, they changed the wording. Any deduction admissible under any provision of chapter under heading C, deduction in respect of certain income. That is refers to 80P. In our case, cooperative society 80P, 80G. You want to claim, file the return within the due date. Otherwise, you are not entitled. Unless you furnish the return within the due date. That is what this will say. No such deduction shall be allowed to me unless he furnish the return of income such assessment year on or before the specified under 139 sub class 1. Now I'll come to the section 145. Friends, is 145. This section 145 says very clearly, any person who is computing income under this business and profession or other sources, subject to provision 2 of section 145, file and you have to compute the return in according to the cash system or mercantile system of accounting regularly employed by SSC. It means that you have to follow accrual basis of accounting or mercantile basis of accounting, both are same, or cash basis of accounting. Is permitted, you have to follow one method. You cannot follow mixed is not permissible. In case of cooperative, no. In respect of interest, they follow receipt basis. In case of expenditure, they follow accrual basis. It is called mixed system accounting. It is not permissible under section 145 of the Income Tax Act 1961. And also, friends, they have to follow all the accounting standards. That is the ICDS, Income Computation Disclosure Standard. There are 10 accounting standards notified by the central government. They have to follow very strictly and follow consistently in respect of all this. This is the requirement. But before going to that, I am having one question. That is actually cooperative department issued a circular sometime in June 2020 saying that all the cooperative banks, especially district center cooperative bank, has to follow in respect of accrued interest. Unless received, you cannot account it as accrued interest. This is a circular issued by the cooperative department on 19 June 2020. It says that they say very clearly, Jilla Kendra Sahakari Bank in the DCC Bank in the, they are accounting on this accrued interest in the profit and loss account and declare a huge profit. And but they say this is the you have to follow only receipt basis in case of interest. Friends, I am telling you, this is a contrary to section 145. As an auditor for this type of cooperative, you have to qualify saying that section 57 and rule 22 of the Cooperative Society Act 1959, it says that you can provide the accrued interest provided you realize the interest, then only pay due date. When you are paying due to members, whatever the accrued interest you have provided in the profit and loss account, you have to reduce if you are not realized before the declaration of dividend, reduced. And if a net available is there, you can declare that amount as a dividend. That is only for declaration of dividend. Section 57 and rule 22 of the 1959 Act is applicable of a cooperative society. But cooperative society auditors, you are saying that all auditors are doing audit of a cooperative society. They are ignoring this section 57 and rule 22. Therefore, they are declaring more profit and they are accounting accrued interest. It is not permissible. I not agree with this circular issued by the letter issued by the cooperative department. I say that if you want, this is contrary to section 145. You have to 145 overrules all the Society Cooperative Society Act. It is only for declaration dividend. This is the rule, not for the income tax purpose. But if any cooperative society want to follow this circular for the purpose of income tax, you prepare all the accrued interest as the accrued and you pay income tax on that. I think preparing a two profit and loss account for the purpose of one is income tax, one for the cooperative society is now viable. Therefore, prepare one profit and loss account including accrued interest, but you want to pay any dividend, then you reduce the accrued interest which is not realized on the date of declaration. Reduce. It was rule 22 and section 59 prescribes. You reduce it and declare the dividend. If it is a net available surplus is there in your books, then you declare. That is the provision. It is under the circular. That is the last time I am presenting. Some people from Bhubli, some people from this, they raised a lot of question on this. After that, I studied the circular and I told that time also saying that this circular is no relevance to me as an auditor, as a tax auditor or the statutory auditor of a cooperative society or a cooperative bank. Go by the section 145, accrued all the interest. Go by the, in case of cooperative bank, RBI revenue recognition norms. It is interest on a performing asset, standard asset, account accrued interest, and provide in the books of accounts, and on that you have to compute the income. For the purpose of income tax, for the purpose of Cooperative Society Act, if any accrued interest if is not received on the date of declaration, reduce from the profit declared, and if it is a balance amount only, you can distribute as a dividend, not otherwise. This is a new provision, very clear, and the circular issued by the cooperative department to all the auditors, and they said very clearly, all DCC bank auditors on 19 June 2020, in my opinion, is not applicable to tax audit. It is not applicable to statutory audit. You have to say very clearly in your report if you want to issue the circular. In our opinion, it is applicable only when you are declaring dividend, not for the income tax purpose. Therefore, go ahead with accounting accrued interest in case of cooperative bank as per the RBI revenue recognition norms. In case of cooperative society, accrued interest is definitely receivable. Then you account it accordingly. This is what my view. Now we will go to the friends cash deposit during a demonetization period. Friends, 8th November 2016, our Honorable Finance Minister Narendra Modi has announced saying that demonetization of some currency, 500 and 1000 rupees notes from 8th November 2016 and up to 31st December 2016, he told you can deposit in your bank and take the credit for the whatever the deposit, whatever you have old currency, you can deposit in your bank. First 3-4 days, they have a lot of issues. The cooperative society, what they have done is 3-4 days in the beginning of after 8th November up to 11th, 12th November, they collected the cash from members and deposited to their members' account and cash in hand and deposit to their bankers, their nationalized bank, they deposited. This is the work done by the cooperative societies, collecting the cash from members and credited to the members' account and deposit to the nationalized bank. This is what the cash credit, what section 68 says is. Here is the department started questioning that section 68 is applicable to this cash what you deposited in the nationalized bank, or you are liable for tax. I think a lot of cooperatives are subject to this type of addition for the assessment year 17-18. And we have appealed, a lot of publics we have filed, saying that why this cash credit is not applicable. In this case, when you read this section, any sum is found credited in the books of the SSA maintained for any previous year, and the SSA offers no explanation about the nature and source thereof, or explanation offered by him is not, in the opinion of the officer, satisfactory. The sum credited may be charged income tax as the income of the SSA of that previous year. What it says is, SSA deposited some cash to his bank account, but he is offered no explanation. I can give an explanation, cooperative society. I received from following numbers. You can give member number, address, amount received from him, and credited to his account. And I have deposited this amount, total deposit received from 8th November to this of 500 and 1000 rupees notes. I deposited to nationalized bank. Whether right or wrong, it is a different question. But section 68 is not applicable because I have given the explanation. This amount is deposited by Sriram deposited by some other person. You are members of my cooperative society, and I have deposited to my bank account. Therefore, this is an explanation should be satisfied because you are given the explanation who has deposited. If you have any doubt, go to that member, ask the question, not to me, member, not to the cooperative society. But what is this assessing officer done is, whoever deposited in the hands of cooperative society, they added under 68 and taxed at 68% and liable for tax. This is a big question. I think we have filed a lot of appeals by the cooperative societies where we said that this section is not applicable because we said who has paid the cash, what I have deposited his account, and I deposit in turn, I deposit in my cash book as a cash receipt from member so and so, and I credit it to my account. And therefore, this cash deposit may is an explained, therefore this section is not applicable. Another section, unexplained money. When financial associate found to be owner of any money, bullion, jewelry, all other valuable money, bullion, jewelry are not recorded in the books of account, if any, maintained by him for any source of income, and the associate offers no explanation about the nature and source of the acquisition of money, jewelry or any bullion or anything. Explanation out of me is not, in the opinion of the housing of satisfactory. The money or value of money, bullion, jewelry or other available article may be deemed to be the income of a for such year. Like 68, this is unexplained money in respect of unrecorded transaction. Then is section C says, when you are the demonetization period, if you deposit any amount under 68, 69 or 16A or this one, where total income assessee includes income referred to in section 68, 69 and 16A or 16B or 16C or 16D, and amount reflected in the return furnished under 139.9. It says total income assessee includes any income referred to in this section, or at the time of assessment, the assessing officer includes any income referred on this section. If such income is not covered by class A, then income tax payable on such amount is calculated at 60%, is applicable from 19th December 2016 at the rate of 60%. Whether you include or the assessing officer include, the rate of tax is 60%. And if it is any other income, you have to reduce this income, balance you have to pay normal tax. This is what the section. Now the friends is, any cash deposit during demonetization period, lot of cooperatives that are facing problem. Therefore, my suggestion is already assessment completed. Or if anything for the current year, if there is any cash deposited, you have to say very clearly, cash deposited is the amount received from my members. I will give the name of member, amount received, and his address, and PAN number is available, give the PAN number. Let the assessing officer write a letter to him whether you are deposited, where is source. But this is not my income, this is not my deposit, this is a deposit of the member, I deposit a bank account. Therefore, section 68 is not applicable. Therefore, you can say contest very clearly, this is not my income, this is not my receipt, therefore this section is not applicable. This is what the stand should be taken by the cooperative society to avoid this 30%, say 30% or 60% rate. Friends, this is a very important provision, restriction on accepting or receiving cash more than threshold limit, some threshold limit. You know, section 216 SS, it is there from 84. 1st April 1984, introduced in the Finance Act 1984, it says you are not supposed to accept deposits or a loan more than 20,000 in cash. Specified under the particular provision, you are not supposed to receive or pay. Take for example, specified very recently, the even transaction of immovable property more than 20,000 in cash is not permissible. You cannot pay this. What are the problem we are going to face? We will see. 216 EST, that is also introduced in the Finance Act 2017, effect from 1st April 2017, and 216 SU, this is a provision introduced in Finance Act number 2 of 2019, effective from 1st November 2019. 269 SU applicable from 1st November 2019, and 269T, it is there from Finance Act 1984, effect from 1st April 1984. Friends, out of this first and last are there from 1984. You already faced a lot of problem in this. Now only ST and SU are the new provision which I want to discuss. But anyhow, the SS and ST, these are the new sets. These are the section you have to see on the present market, present environment, that you are not supposed to receive any deposit or a loan more than 20,000 in cash. You have to receive only by a digital mode. You are not supposed to accept anything in cash. It means that more than 20,000 you cannot accept cash. You have to accept only check. In this case, even when a person, a member come to your bank, cooperative society, and says that I want to deposit 1 lakh hard cash. He says, I am a member, please credit to my account so and so 1 lakh rupees. Whether 216 SS is applicable or not? Yes, it is applicable because it says any deposit or loan. If you collect it, it is applicable. Therefore, what is the revenue available to me? What is the suggestion available to 216? My suggestion is, friends, cooperative society should not accept anything cash. What you can do is prepare a pay slip saying this is my account number and credit to my account. Take for example, Sriram is depositing 1 lakh cash to his account in some credit cooperative society. What you have to, Sriram, when you come to cooperative society, prepare a pay slip. As it is a cooperative society going to deposit in this one, you prepare a slip saying that credit to source of cooperative society. In that case, credit to Sriram, account number so and so. You write the amount and pay slip prepared, signed by you. Give to the cooperative society. Cooperative society collect all the cashes from all the members who gives the cash. Go to bank, their bank, put the seal and come back with a pay slips. A pay slip posted to the member account. Then we can say you are not deposited cash to the cooperative society. Cash is deposited by a member to your nationalized bank. Therefore, 216 SS is not applicable because when you deposit to another bank directly by you cash, it is this 216 ST is not SS is not applicable. I think this is the only a practical solution to all the members or all the cooperative society. Please prepare a pay slip, ask the depositor to sign the pay slip. Instead, ask him to go to your bank. You collect all the amount, go and deposit on his behalf and collect the pay slip. Come to your cooperative society and credit to his account whatever the amount is deposited in your nationalized bank. So that you can say, I am not depositing, he himself has deposited direct to my nationalized bank. Therefore, this 216 SS is not applicable. Next is friend 269T, ST. It is very clear. Sir, other than this 269, I want to discuss you. This is exempted only both depositor and receiver, both are agriculturist, then 269 SS is not applicable. But in this case, it may be agriculture depositing a cooperative society. The cooperative society is not an agriculturist, therefore 216 SS exemption specified will not be applicable to this type of transaction. Is liable for 216 SS consequences and you have to pay penalty. Penalty is equal to the amount received in cash is the penalty. Suppose you have deposited 50,000 or 1 lakh, penalty is 1 lakh. This is the very important. Next is 216T. 216 ST. This is a very interesting provision. Mode of undertaking transaction. Kindly friends note, any person, no person shall receive the amount of 2 lakhs or more, 2 lakhs rupees or more per aggregate by person in a day. In a 24 hours of a day, you are not supposed to receive from that person more than 2 lakhs. And in respect of a single transaction, more than 2 lakhs you cannot receive in cash. In respect of transaction related to one event or a occasion from a person, you cannot receive, you can receive only by check. One by one. In a day means day starts from 12 AM to another 24 hours. In this time, you are not supposed to receive a cash from the person more than 2 lakhs in cash. Then in respect of single transaction means, suppose you raise a one invoice or an invoice of 10 lakhs, you cannot go on receiving a cash 1.5 lakhs, 1.75, 1 lakh, like that 10 lakhs you cannot receive in cash. It is not permitted. Single transaction you cannot receive more than 2 lakhs in cash. Like in respect of transaction related to one event, it means suppose you have an event called or occasion marriage. Suppose in a marriage, suppose you want to give a catering contract, you cannot pay more than 2 lakhs in cash for catering contract. If you can receive less than 2 lakhs, you can give not more than 1. This is a very clear 269T, which is applicable from 1st April 2018, covers all the cash transactions. You have to do only digital transaction, no exemption to the agriculturist. even agriculture is doing this type of transaction, is covered by 216. He is also liable. No person, any person, no person means any person who is doing the transaction more than 20 lakhs receipt is liable, including auditor. Suppose an auditor receives any amount for bill raised, you receive a cash more than 2 lakhs, then you are liable for penalty equal to the cash received. This is the penalty for receiving cash. Then is 216 SU. This is a new provision introduced from 1st November 2019. You are supposed to accept up through a prescribed electronic modes. Every person carrying on a business shall provide a facility for accepting the payment through a specified electronic mode in addition to the facility other than electronic modes. It means Paytm, all these things you have to provide in your premises so that when your total turnover in a year as it exceeds 50 crores, you are supposed to install this electronic mode of accepting the amount by Paytm and other things. All persons who are more than this 50 crores limit, they have to install this machinery, install this digital mode of accepting the amount. This is a 216 SU. If you are not accepted, there is a penalty for this also. Next is 269T. It is there from 84. It says you mode of repayment of certain loans and deposit. You are not supposed to repay anything loans or deposit in cash. You have to pay only by check mode more than 20,000. This I think all of you know that it will not be any issues. And now I'll raise a question for discussion. If you have any questions, friends, we will discuss. Then after that, I'll go to COVID and case laws and 26 years. These are the 4 topics pending. I'll take up the issues. Now will be a question on the any issues we discussed so far.
Sir,
Tell me, sir. Sriram, tell me.
sir, new provision in 194A applicable from 1/4/2020, TDS on interest paid to members was exempt earlier. Now, from 1/4/2020 onwards, if the gross receipt of the cooperative society is more than 50 crore, then they shall deduct TDS on members also. Elaborate.
Yeah. Sir, if it is a cooperative society turnover for the immediate preceding previous, that is for 31st March 2020, he is more than 50 crores. They have to deduct TDS on the interest paid to members, irrespective of the, once you exceed 40,000 or 50,000, they have to deduct TDS at the rate of 10% or 7.5%. Now, you have to deduct. There is no exemption. 194A, subclass 3, subclass 5 is available only for the cooperative society whose turnover is less than 50 crores. If it is more than 50 crores, the exemption is not available. Yes, sir?
So next,
Yes, sir.
what is the meaning of turnover in case of a primary agriculture cooperative society?
Payment turnover means what appearing in income expenditure account as an accountant, maybe interest received, whether you are dealing in commodity, what are the sales affected, that all is turnover. If it is more than 50 crores, that is affected. Turnover means not the loan given, loan taken, that is not the turnover, but what is the interest credited in the profit and loss account, gross interest, not interest will not be reduced, interest credited in the profit and loss account. And if the cooperative society dealing, like a primary agriculture community, they will deal in fertilizer, seeds and other things, that turnover also you have to add. Altogether is more than 50 crores, then this exemption is not available. They have to deduct TDS on the interest paid to members. Any other question?
Yes. Is 194 is applicable to commission agent who is a cooperative society?
Yes, sir.
Is 194 is applicable to a commission agent who is a cooperative society if the turnover is less than 50 crore, if we exclude commission agent sales?
No. I please repeat. Cooperative society is a commission agent.
Yes, sir. Here, marketing cooperative society is there, no, sir.
Yeah, correct. Is a gross commission received during the year is less than 50 crores. Correct.
Yes, but he's asking in this way because for them under GST the turnover is both agriculture as well as the commission.
Okay.
Trading as well as commission.
I will answer. Take for example, why you are going to the marketing cooperatives. You take for example APMC. In APMC, you are Shumaga. Organic traders who are APMC agent, whatever the material they buy from agriculturals, they charge URD and they'll pay, raise the invoice on the trader. For the purpose of GST, this is called purchases. This is whatever the sales be affected through invoice is called sales. For purpose of limited purpose of GST, it is called turnover, and you will pay GST return. You file GST 9 and 9C if it is more than 5 crores. That we are doing it. For the purpose of income tax, under 184A or 184N or for any other purpose, only turnover means your income declared. Turnover means commission, interest received if it is anything. Altogether, if it is more than 50 crores, then is provision applicable. For GST is different. That is my personal view. For GST is different. For this is different. That's what my personal view is. In respect of 194 also, I expressed like that. Okay.
Next question. Is interest on SB subject to 194A?
Very nice, sir. No. No. SB account is not subject to TDS under any provisions. Whether you receive 10 crores SB interest is not liable for tax. But liable for income tax, not liable for TDS. Kindly note, it is liable for income tax, not liable for TDS. Kindly note, because one of my client was there. Sir, TDS, if you keep it in FD, I am liable for TDS. Therefore, you are keeping full amount in SB account. I told, why you are keeping in SB account? Sir, he told, no TDS. But TDS is not there. But what are the income tax you have to include? You are getting less interest. After paying interest, after paying income tax, your net tax return is next return you have to net return you have to work out. Therefore, keeping in SB account is not a very good decision because it's liable for income tax, only subject to 50,000 in case of senior citizen. In other cases under 82 TA, it is only 10,000. This is the exemption. Otherwise, SB interest is not liable for TDS, but is liable for income tax. Kindly note this difference. Because in all the forums wherever addressed, a lot of people ask us, SB is not liable for income tax. No, is liable for, not liable for TDS, but liable for income tax. This is the problem.
Yes. Next, in a cooperative bank can accept Form 15G from trust and NPOs.
This is a very interesting question. Even though today is a topic on taxation of cooperative society, some of the questions related to TDS I will try to answer. What is the question here is cooperative society, and his income is not liable to tax because of any reasons. Income is less than the taxable limit. Then they can give 15G, not 15H. 15H is only for senior citizen. It is for 15G. It means you are not liable for tax because of any reason. In case of cooperative society, your income even 10 rupees, you are liable for tax. Therefore, cooperative society cannot give 15G. Cannot give 15G at all. You should be not liable for tax. If it is the income is, take for example, 5,000, you are liable for 10%. If it is more than 10, we are liable for 20%. More than 30, you are liable for 20%. Therefore, you are not entitled to give 15G cooperative society. Sorry. Cooperative society is not entitled to give the 15G to bank or cooperative nationalized bank. Yes, sir.
But the question is whether cooperative bank can accept 15G.
Sir, when the recipient is not liable, cooperative bank, how they accept? They also equally see that whether he is liable to give 15G. If the 15G is not available, if you are the auditor of a cooperative bank, you tell me whether it is a right in accepting 15G when he is not entitled to give exemption.
Sir, he is asking you whether a trust and NPO can give 15G to a cooperative bank.
I'll come to trust and NPO separately. So, in case of a cooperative, in case of a non-profit organization or a charitable institution, they can give 15H, provided their income from all the sources after the computation, latest computation is not liable for income tax because their income is receipt application is no tax because it's fully exempted under 11(2) accumulation. Then they can give a declaration under 15G saying that my income is not liable to tax, give me concession. The charter institution can give a 15G, there is no bar. Bar for 15G is only company, partnership firms cannot give. Individual can give, trust can give, NPO can give, cooperatives can give provided equal. But cooperatives are not possible because they are liable for income tax. In case of trust, non-profit organizations are not liable because their income as per the computed, as per the provisions, are they not liable, income is nil or accumulation is sought under 11(2), then it will not be any issues. This is it. Earlier, there was one circular. It says any charitable institution, the income is unconditionally exempt under 1023C. Then they are not required to deduct taxes, but they are clarified now. The institution also satisfied that income is not liable for tax or income is less than the taxable limit of 2.5 lakh. Then you can give the declaration in 15G. Then cooperative bank can accept 15G and upload in 26Q when you are doing quarterly return. Whenever you see a quarterly return, you are supposed to upload the 15G, 15H received during that particular quarter. You have to upload. This obligation you have to do it, whether deduct or not deduct, you have to upload. You upload based on this 15G, then you are exempt. As a bank, you will not liable for any consequence. This is the yes.
Sir, a cooperative society has TDS on interest payment to NABARD.
Interest payment to
NABARD.
NABARD. Sir, NABARD is not a notified financial institution. I checked whether the NABARD is a notified financial institution. If it is a notified financial institution, then this exemption is available to that. NABARD, 1 second, 194. Sir, the cooperative society will not pay to NABARD, it will pay to the cooperative bank, district DCC bank. Where is the question of paying to NABARD? Tell me, under which instances you will pay NABARD directly? I'll come to the practical. I know I am the auditor for Apex Bank. So no cooperative society will pay interest directly to NABARD. It will be routed through DCC Bank to Apex Bank to NABARD. Therefore, in this case, you pay to cooperative bank, therefore TD is able. But I'll see whether NABARD is covered by the exemption clause in case of a I think NABARD is an exempted unit. You are paying to the institution of nature of NABARD, you are not required to deduct tax. It is exemption under 194A, subclass 3, subclass 4. It is exempted. Notified. Yes, sir.
For the purpose of filing statement under section 206A, is there any monetary limit?
No, sir. 206A says that if TDS is applicable, sorry, TDS is not applicable because you are not filed deduct tax source, then you have to file 206A. For that, no limit for 1 rupee to 40,000, it will cover. There is no exemption threshold limit at all. Whether you pay 10 rupees, you have to include. You 10 rupees also you have to include and upload the return. This is the requirement from November 2019. Therefore, this year, I think lot of cooperative societies, banks are not filed this return at all. Wherever I go, I tell that they say this provision. Considering all these things, friends, I am addressing the chart accountant. I want to tell you, in case of a bank or a cooperative bank where they have some 50-60 branches, I think this work is the continuous work of filing 26QA and 26QA by head office. Therefore, I was addressing one Belgaum branch of Urban Cooperative Bank Federations. That time I was telling in one of the big auditorium, I was explaining this quarterly return have to be filled by the branches. After that, head office has to be quarterly return. For this purpose of preparing one quarterly return, I think 1 quarter is required. It means what I mentioned was 1 quarter, another quarter is required 90 days. But one participant sitting in the other side, he told, sir, 1 quarter is not required, sir. I think you prefer 2 or 3 quarters. What it was a liquor. Anyway, better way that we have shared that thing. Okay, sir?
Yes, sir. Sir, next. What is the penalty for non-filing of statement under section 206A?
Sir, there is a very clear under 272A, there is non-filing. I think they are levying 100 rupees per day of non-filing the returns from date of default up to the date of file.
Yes.
100 rupees. 100 rupees.
Yes.
272A, in that penalty for other provisions, 100 rupees per day of default. It covers under that provision. 272 capital A, that covers that penalty for non-filing the return within the due date. Whatever I said, due date. If you are not filed, then you have to file penalty of 100 rupees, subject to waiver. If it is a additional commissioner of income tax, he is a person who is levying penalty. If he is satisfied that it is a reasonable cost, then he can say otherwise he can levy penalty under 272 capital A. Capital A is covers that provision. This is a big provision. It says for any returns you are supposed to file under the Income Tax Act, if you are not filed digitally or anything, it's covered 206A also. it says 100 rupees per day of default is the penalty. Penalty equals 100 rupees for every day during which failure continues. Up to the date of filing, you have to levy 272 capital A. Last where it says that 100 rupees per day penalty, subject to you fulfill that you have a reasonable cost, then the additional commission may waive. Otherwise, you have to pay the penalty. Yes, sir.
Whether turnover includes GST collection, the society follows inclusive method of accounting.
Sir, your method of accounting is inclusive of GST, correct?
Yes.
Sir, there is so many decisions even for under the tax audit whether turnover of 1 crore or 5 crores whether it includes GST or not. That is an issue arises. But my view is you are consistently follow including GST, then you have to take turnover GST. If you are not taking GST, is keeping separately as other liability, GST collected, GST paid is also permitted. Then Charangi Sales Supreme Court decision, it says that what method you are following in respect of this liability. You are including, then you have to include for the purpose of turnover. If you are not including, then you keeping a separate liability. Whatever collected, shown as other liability credit side, whenever you pay, debit to that other liability account and debit to bank account. Then it is the method you follow. Consistently, you are including it in the earlier year, you have to follow that method. You cannot change because if you are following only the net method, it is you have to continue the net method. This is permitted as per your method of account.
Sir.
Yes.
Next,
Sir.
donation received from member not for specific purpose, which is accounted as revenue in profit and loss account, whether such donation received form part of turnover under 44 AB.
Who is the co-operative receiving donation?
Yes.
Sir, co-operative receiving donation is definitely it is liable as a receipt, liable for income tax, liable for turnover, everything included. Donation, sir, co-operative is not liable or not authorized to collect donation. Whatever you collect, for any reason, somebody gives contribution, somebody gives co-operative society, it is a revenue receipt, it should be part of turnover, you have to pay tax also. Not for the purpose of turnover, for the purpose of income tax is a receipt. Revenue receipt liable for income tax. It should be included. Yes, sir.
Next, for filing statement instruction 206A, is there any monetary limit? This is also answered, sir.
Yeah, answer. No monetary limit, you have to pay on the full amount. Yes, sir.
Sir, can you suggest remedy if return of income filed belatedly under section 80P deduction is denied for the assessment year 1819?
Very good. Sir, this is applicable for assessment year 1819 onwards. Lot of cooperative societies miss this opportunity filing within due date. Now you are not filed. The assessing officer already denied your deduction 80P. Only option available to you is going to the CBT board under 119(2)B, seeking that we have filed. What is the reason for delay? I'm not aware of the provision, but there is some valid reason. Secretary is not well. Secretary was hospitalized. Now you can say COVID reason he is hospitalized, something he can cook. But in 2018-19 assessment year, you have to give a valid reason. Place before the CBDT saying this is the reason I have not filed. Therefore, you give me to file the return, and they permit. They say yes, your reason mentioned in your application is reasonable, and we will accept. Then you can file the return belatedly now and asking for ATP. Even ATAC, whatever the restriction, it is not applicable. If they provided, CPT has to give a clarity, not by anybody. Your assessing officer cannot give, principal CAT cannot give, chief commissioner cannot, only board has a power to waive this condition, provided you make an application to CBT, but clarifying reason, facts, and what is the reason for not filing within the due date. That is the area, then they can accept it. I think very, very difficult. You know, how to get the clearance from CBT is a big question. It's very difficult. Anyhow, you can try, but otherwise, no other means. Appeal is not this one. Appeal, well, law is very clear. When you say you have to file within due date to get your ATP deduction, you are not filed, you are not entitled. They are very clear. There is no mercy petition. You cannot say our secretary is not aware, the secretary was not aware, our auditor didn't tell this provision. All these things is different. But if you are a consultant for all cooperative society, please file the return on priority basis before the due date. Otherwise, ATP deduction will go. This is a very, very interesting decision. Don't delay from your end. I know in one place in Davangere, one chart accountant, he received all the details 10-15 days earlier. He thought you can file anytime, but last day started uploading the return. It was failed. It didn't through at all. Then he quoted that reason, the last day of the due date filing return, There is a lot of rush and could not file the return. Therefore, we filed on the next day. Therefore, you give me reason, this is a reason of loss. Give me under 192B thing. We asked, so far you have not received any exemption there, but we have filed appeal already. Both you have taken same one appeal as well as condemnation appeal before the CBDT. This is what we are given a reason. I think only quoting reason before CBDT, and if you are lucky, you'll get the thing. Otherwise, I think you lose the benefit. You lose the benefit.
Yes, sir. Less questions are there, sir. We will finish the session and then we will take the questions, sir.
Okay. Sir, next is code 19 notification circulars. Friends, I'll take all COVID related issues in which they told what are the notification press release dated 4th April 2020 and the 13th May 2020. And the very important thing, 13th May I'll take up. Other 4th April says that any person is applied for a TDS exemption for the lower reduction or the nil rated reduction. Earlier, if you have done, same certificate will continue up to 30th June. That is the notification on 4th April 2020. Regarding 13th May 2020, 13th May 2020, that is very clear. It says that 13th May 2020, it said that tax audit, whatever is there for the year ending 31st March 2020, you can file before 30th November and the tax audit to put by 31st. That is a date. And also they said that in respect of TDS to be done anytime after 14th May 2020 up to 31st March 2021, any TDS after 14th May and up to 31st May 2021, you have to deduct at the normal rate less 20% discount. It means you have to pay 70% of the normal rate. If the rate is 10, you have to deduct at 7.5%. Whatever the TDS related to for a period from 14th May 2020 to 31st March 2021. This period, you have the discount of 20% in TDS. They say that you have to give a liquidity to the deductor, therefore you made a provision. Yes, they made a liquidity to the deductor. Whatever the deductor, you have to pay tax on this now, later. And 234C interest attract, all this interest will attract. But anyhow, they said that deductor will get a benefit of 50,000 crores already a level. I don't know whether how many crores, but anyhow, this is the provision. And 24th June, they said they extended the due date from June to July. That is a due date. After that, extended to October. That is the in respect of a return related to year ending 31st March 2019. You know, 31st March 2019, if you want to revise or you want to file the return, due date was 31st March. That was extended to June, then extended to July. That is the due date. They are notified. This is what I wanted to tell you. These are the COVID-related circulars which are applicable to the even cooperative societies. Now I'll come to the case class, my friends. Here is the case class. Before going to case class, I want to tell you, friends, any issues before you as a consultant, whatever the issue is there, you have to see whether you apply your common sense first. Whether these expenses are allowable, whether the expense related to business or the expenses is connected to business, whether it can be allowed as expenses. That is a common sense you have to apply. Then after applying common sense, then you see any basic law of the Income Tax Act or the Cooperative Society Act or any SOAR Act, it says that whether this expense is not allowable or ATP is not allowable because you are not doing the activity specified or condition specified under ATP, like that you have to go to basic law. Then you have to read the case class. What happens in the most of the cases, what will do, sir, as per the Karnataka High Court already case law, you will not read, you will not apply common sense. Next is you will not apply basic law. You go to straight to the case class. Don't go to case class. You read first common sense. You take any issues before you. Think 10 minutes whether the expenditure can claim, whether I'm entitled to claim this benefit, whether I'm entitled for deduction, ATP. What are the conditions I have to fulfill? Read the section ATP. Read all the conditions. Basic law, common sense. Then you see whether I can claim. After that, you can go to case class. What you will do? Section says, Karnataka High Court says, Criminal Income Tax Tribunal says, therefore I'm entitled. Where you will not see basic law, you will not apply your common sense. You go direct to case law. It is not good. Friends, first you apply common sense. First you apply basic law, then you apply case law, then read the any provision. Then you will be very, very well versed and it will give a very good opinion or very good suggestion on the any issues related. Considering this basic thing, we will go to the case laws which are related to cooperative society. Friends, I'll go to the first case law, which is a very important of the Supreme Court, Citizen Cooperative Society Limited versus State Commission of Income Tax, 397 ATR, number 1, Supreme Court, dated 6th August 2017. Friends, you will take this case law very clearly. In this case law, it says that it is a Andhra Pradesh High Court decision based on the Multi-Aided Cooperative Society Act. In that, they say that a citizen cooperative society having a transaction with the nominal member as well as regular member as well as associate member, they receive deposit from nominal member, give a loan to regular member, or take deposit from nominal member and give it to the associate member. This is the mix of the transaction. They said that as per the Multi-Aided Cooperative Society Act of Andhra Pradesh, you cannot deal like that. Therefore, concept of mutuality is not there. Therefore, you are not entitled for ATP. Friends, kindly note, in this they say, where you have a transaction of the following nature, you receive deposit from the nominal member, you receive deposit from the associate member, and give loan to regular member, you are not entitled for ATP. This is as per Citizen Cooperative Society. The concept of mutuality is not there. Therefore, you are not entitled. Friends, kindly read ATP. There is no word of concept of mutuality. They say any cooperative society doing following activities are entitled for ATP deduction. Therefore, this interpretation given by Citizen Cooperative Society in Supreme Court decision, great respect to Supreme Court, I feel this section is not, this case law is not of Karnataka because as per the Karnataka Cooperative Society Act, member includes regular as well as nominal as well as associate member. It is permitted under the Act. Member means any member whose name is entered in the register of member is a member, he is entitled for deduction. Therefore, ATP is available to all the cooperative society registered under the Cooperative Society Act. You see the definition of member given under the Cooperative Society Act 2F. Then any member, whether regular or associate or nominal member or member, you are entitled for deduction under ATP. This is what my interpretation. Even though Citizen Cooperative, please read this Citizen Cooperative decision, distinguish that it is not applicable to your type of cooperative, and also say very clearly this is applicable only for Andhra Pradesh Multi-Aided Cooperative Society, not to Karnataka Cooperative Societies registered under the Karnataka Cooperative Society Act. Therefore, it is not applicable. Next is Tumkur Merchant Savarna Credit Cooperative Society. In this case, we only handle this case is our assessee. Here, Tumkur Merchant Savarna Credit Cooperative Society is a big cooperative society registered under Savarna Act. They have collected lot of deposits, lot of so any surplus fund, whatever is available at any point of time, deposited in a nationalized bank. Deposited in a nationalized bank, not cooperative bank, deposited in a nationalized bank, and they got a lot of interest on this deposit. Whether this interest is exempted under ATP, whether 2A or 2D, this is the question before the court. Court examined all the issues and they said surplus fund available with the cooperative, they had to keep somewhere else bank only. You cannot keep it in the hard cash, you cannot keep it with you. When a member asks for the withdrawal or when a member withdraws his deposit, you have to say, oh, go and deposit, withdraw from this particular bank account. Therefore, surplus fund keeping in a nationalized bank, it is an activity provided under the credit facilities provided to members under 2 subclass A. Therefore, you are entitled for whatever the surplus you are depositing in a bank account and you are getting interest exempted under ATP 2A itself, not 2D, 2A itself. Therefore, you are entitled for exemption. That is the definition given by the, or that is the interpretation given by the Karnataka High Court. Is High Court decision. Karnataka High Court with Bengaluru Bank. Next is Udaya Savarna Credit Cooperative Society. Very interesting. In Udaya Savarna Credit Cooperative Society, dated 17th August 2020, they have the view that Savarna Credit Cooperative Society registered the Karnataka Savarna Act. Karnataka Cooperative Society Act is different. Savarna Act is different. For ATP is available only for cooperative society registered under the Cooperative Society Act. Karnataka Cooperative Act. Any cooperative under Savarna is cooperative society is called cooperative. It is registered under the Karnataka Savarna Act. This ATP is not relevant because you are not a cooperative society. This is the interpretation given by the Income Tax Appellate Tribunal in this decision. So Udaya Savarda Credit Cooperative Society, they held that Savarda Cooperative Society is not entitled for ATP deduction because it's not a cooperative society. This is on 17th August 2018. Friend, after that, Siddhartha Pattana Savarda Sahakari Cooperative Society on 16th July 2000. You see the earlier decision on August 2018. After some time, this is in July 2019, Siddhartha Pattana Savarda Sahakari Bank, where they reversed the decision. It is a very nice decision. In that, they said that whether Savarda or credit cooperatives, we all are entitled for ATP deduction because under the Karnataka Savarda is also a cooperative society. Only for limited purpose of admission, it is called Savarda. Otherwise, it is also a cooperative society entitled for deduction. This is also income tax applied to the decision of Bangalore branch. Next is Swabhimana Savarda Credit Cooperative Society Limited, ITO versus this one. This is the Karnataka High Court decision, writ petition filed by the Savarda Credit Cooperative Society based on the Udaya Cooperative Society. They filed a writ before the Karnataka High Court said that Savarda also a credit cooperative society entitled for ATP deduction. Karnataka High Court considering all the views of Siddhartha Pattana Savarda and Udaya Savarda finally held that you are entitled for ATP deduction, you are also a cooperative society registered under the Cooperative Society Act. You are Savarda also cooperative society entitled. Now, as on today, Swabhimana based on Swabhimana Savarda Credit Cooperative Society, all Savarda Credit Cooperative Society is entitled for ATP deduction. ATP deduction because it is a credit cooperative society. Another is Atma Shakti Multipurpose Credit Society dated the 18th October 2019. In this is regarding the interest paid to interest should be disclosed as income from other sources and whether the members who are all the members of nominal members and also regular members all is combined. This society where nominal member, associate member after the citizen cooperative decision is rendered sometime in 18th October 2019. It's a very clearly, irrespective of a member, regular, nominal, you are entitled for ATP deduction. You have to disclose in the income from other sources and claim ATP. Whether under business and profession, it is not important. Your gross total income includes any income from the providing credit risk to members, whether member means regular as well as nominal as well associate, considering considering the citizen cooperative society. In this, they said that you are entitled for ATP deduction. Next is Totagarike Cooperative Society decision rendered on 16 June and Totagarike Cooperative Sales Credit 392 and 74 5th January 2017. Friends, I will take first Totagarike Cooperative Sales Society 392 ITR 74 dated 5th January 2006 in which they said that you are entitled for deduction on the interest received from a cooperative bank. In this case, cooperative society deposited a lot of funds in the cooperative bank. Canara Credit Cooperative, Canara District Center Cooperative Bank, they deposited. I think this is in Sagar. Sir, I'm correct? Sir, hello? This is in Sagar. Sorry, Sirsi. In that, the what are deposited in a district center bank, lot of deposit, they received a lot of interest. Then the income tax officer said that no, this interest is received from a other than a cooperative bank. And this is actually a cooperative bank. They said that this is received from district center cooperative bank, not from a cooperative society. Therefore, you are not entitled. But in the decision on 5th January 2017, Bangalore High Court, Karnataka High Court, Bangalore branch, Bangalore in Karnataka High Court in Bangalore, they said that yes, you are entitled, even though you receive the interest from the cooperative bank. You are entitled. This is the first decision. After some time, definitely after 6 months, 16th June 2017, another decision of the same assessee on a different High Court, Dharwad bench, it is held no. If you are receiving interest from a cooperative bank, what are the interest received? You are not entitled for ATP 2D because you are receiving from the cooperative bank. It is not a cooperative society. These are a contrary decision. One says yes, that is on 5th January 2017. Another one says of the same assessee on 16th June, Dharwad bench says that you are not entitled for ATP 2 deduction because you are receiving interest from cooperative bank. not from cooperative society. This is the decision, friends. I thought these are all important decisions I have to share with you. I share. Please read these decisions and take any issues before you take them. Now is Form 26 AS. It is effective from 1st June 2020. 1st June 2020. New form. This is called annual information statement given in 26 AS. All of you know 26 AS is the updated information on the assessees regarding TDS, TCS, transaction of immovable property, and advanced tax paid. All these things will be there in the old form. From 1st June 2020, they said that you will have more information apart from the what existing. They said that every prescribed income tax authority, a person authorized with such authority, shall upload in a registered account of the assessee. It means there is a registered PAN number. He will update to his account in a particular form. That is a 26 years. And a registered account means they are defined. What is a registered account means? As per the income tax website portal, designed as such by the prescribing authority, there is a PAN number. This will be uploaded by the Principal Director of Income Tax Systems. He will update as per this 285 BB, updating information. What are the information new form under Rule 114I is information related to tax credit source are collected. It was there earlier also. Now information related to the specified financial transaction. It was there. Now we have to be very clear. It will be new thing. And payment of taxes. It is also there earlier. Advance tax as personal tax. Now they will demand and refund. Earlier refund they used to give something. Now is a demand and refund both will be uploaded. And another information related to pending proceedings related to that year will be there. It means that pending proceedings of the earlier year, but it is outstanding on the particular previous year, will be uploaded in this pending proceeding. Information related to the completed proceedings. I don't know how many years completed proceedings they'll give it. We have to wait and see what is the completed proceeding. And that we have to see whether it is 3 years or 4 years, 5 years or 10 years. They'll give. These are the new forms, new prescribed information you have to give it. In that, this board has authorized to the principal director to give the information. In this, I have put it in bold. It is a Aadhaar number you have to give in the new. Earlier it was not there. Now you have to give. Now you have to give date of birth or a date of incorporation. Mobile number is must. Email address is must. Earlier it was not there. Now it is a must from 1st June 2020. Next is nature of information you have to give is information to tax rate source, collector source was earlier there. Special transaction was there earlier. Related to payment tax earlier was there. Now is information related to demand as well as refund. Both demand is included. Refund was earlier there. Now is a demand is included. This is a 5 and 6 is a new information. 7 also new added. Information related to the pending proceedings they have to give it. Information related to the completing proceedings they have to give it. Any other information related to sub rule 2 of rule 114. Any other specified information is there that also have to be included in this. This is the new form effective from 1st June 2020. This you have to give it. Friends, this is what my allocated topic for discussion. So any other points is there I want to discuss or I want to give my views. If any other questions which I have not taken earlier, I want to take now and answer.
Yes, sir. So there is a discussion.
Tell me, Sriram.
Is the amendment to large cooperative society does not affect TDS on interest paid by cooperative bank to cooperative society? Continuation. Because in Finance Act 2015 memo, interest from cooperative bank to cooperative society are referred under section 194A subsection 3 subclause 5. Since Finance Act 2020 amendment for 194A subclause 3 subclause 5 for cooperative bank having turnover more than 50 crores.
Correct, sir. I told you earlier. See, you have to see two aspects in this exemption. 194A old provision says very clearly when a cooperative society paying interest to member or to other cooperative society or a cooperative bank paying to cooperative society exempted. But in case of a cooperative society, his turnover is more than 50 crores. Very rare. More than 50 crores, maybe big like Thotogarka cooperative society with all this turnover is maybe 50 crores. Then interest paid by a cooperative bank you have to deduct tax source. Similarly, interest paid by a cooperative society to its members, you have to deduct tax source. That is what they view. That is what they view. But another view is possible is only in case of turnover is more than 50 crores, then cooperative society have to deduct TDS on the interest paid to members. But whatever the interest are receiving from the cooperative bank as done in the earlier year, that exemption will continue to be available even though my turnover exceeds 50 crore. That is another view possible. Another view possible, but you have to wait and see because no clarification as such. But if a bank, cooperative bank, another cooperative society, interest paid, you can give the exemption because it's already covered in the earlier provisions. There is no limit of 50 crores applicable to that. But you say that no, you are liable. But liable only if I have a deductor, then you have to deduct. Not for recipient, that provision is not applicable. I mean, as a recipient, it is exempt till exemption continues. That's what.
Sir, whether deduction of rupees 50,000, that is general deduction under ATP2C, is available for capital gain?
He is not having any other income, is it?
Yes, only this sale of property like that.
But no other income during that year.
You think this way?
I think there is no other income, only capital gain. Give a basic deduction of 50,000 rupees available. You can give the deduction. Then work out the tax liability for a capital gain and pay the taxes. Not under third schedule, first schedule of the Finance Act. You go to the capital gain tax, but give the basic exemption of 50,000. You are not having any other income under any other section.
Yes, sir. A client is a Sovarda cooperative society. The dispute of whether Sovarda is a cooperative society is pending since 2012. Now, AO does not treat the Sovarda as a cooperative, thereby proposing to tax the demonetized money deposit.
Sir, repeat, sir. Question repeat.
The client is a cooperative, Sovarda Credit Cooperative Society. The dispute of whether Sovarda is a cooperative society is pending since 2012. Now, AO does not treat the Sovarda as a cooperative, thereby proposing to tax the demonetized money deposit.
Sir, very clear. I told you, as per the Karnataka High Court writ portion, Swabhimana Credit Sovarda Credit Society, it is a matter is rest very clearly. Sovarda is also credit cooperative as per the Karnataka High Court. Therefore, our friend can quote this case law. So, Swabhimana Sovarda Credit Cooperative Society is the writ petition where Karnataka said that Sovarda Credit Cooperative is also a cooperative society entitled for ATP deduction. Okay, you can note that you are entitled if you are in Karnataka. If it is outside, then you have a question mark. The 2012 dispute is now it is not there. After that, this writ petition, it is very clear you are entitled for deduction.
Section 68 is blatantly applied involving the penal provision too. How far the reasoning of AO is correct if the assessment is only for the purpose of appeal 20% collection?
Here is 68, sir. This is you have to, as an assessee or representing the assessee, you have to give very clear why section 68 is not applicable. You have to give the reasoning in writing. It is recorded or it is explained. This credit is already somebody's credit, is not my credit. As a member of as a cooperative society, I collect from all members. You have given the explanation in writing, then 68 is not applicable. If the assessing officer presumes 68 is a correct provision and you want to tax under 68, you can take up to the appeal, but definitely you're going to win. Then 68 is not applicable because you are recorded transaction and you give an explanation saying that this money is received from XYZ member and deposited, and you also given a credit to this account. It is not, you are not utilized. This is not your income. This is a receipt, whatever received amount is not your income. Only when your income, whenever receipt is the nature of income, you have not accounted or you accounted not properly explained, then only 68, 69 is applicable. Otherwise, no, you have to not liable. And even if you add it, you can say that you are liable for at 30%, but dispute it. Dispute it. You are not dispute. Yes, sir.
So, you have given suggestion of direct deposit of cash through payslip to avoid complication of section 269 SS. Is there any way for section 269T?
Sir, 269 is repayment of deposit. I am not repaying anything. I am depositing my account. Where is the question of repayment? Sir, 216 SS or 269 both read together. Only when I deposit cash in my account, this section is applicable. If you deposit in a nationalized bank, it is not applicable. Therefore, what is my suggestion is, in case of a member of a cooperative society, come to cooperative society, prepare a pay slip himself and sign. And instead of he is going to bank, you will send one repository from the co-operative daily, all pay slips together and deposit to the bank. And in pay slip says deposited by Sai Ram, 10 lakhs deposit. Okay, I will take credit to his account. That's all. It is not my cash. It is a cash deposited by him to my account because this account he knows it. He is deposited my account. I displayed my account number. Please deposit to this account. I display in my cooperative office. Please deposit to this SB account or my current account. He will deposit to that account. Therefore, it is not attracted by 216. This is only suggestion. Okay? It is my suggestion to avoid 216. Otherwise, all credit cooperative cannot do business at all. They have to close.
Yes, sir. Next. Can a cooperative society accept pigmy deposit exceeding 20,000 against 269 SS?
Sir, what is it? Yes, sir. Repeat.
Cooperative society accept pigmy deposit exceeding 20,000 against 269 SS?
Sir, any deposit, not necessarily pigment deposit, not any savings account, any deposit accepted more than 20,000 anytime during the financial year, including the earlier deposit. If it is more than 20,000, 216 SS is attracted. Therefore, I told you, do to a transaction where you deposit directly. Pigmy agents collect all the deposits, pay slips signed by the depositor, he will deposit directly. He will act as a coordinator between the depositor and the cooperative society. Then 216 SS is not applicable. 216 SS is not applicable. Yes, sir.
Next one. AO take hard steps to recover tax due during lockdown period. Is he justified? I think it is out of the box.
Sir, what is that?
AO take hard step to recover tax dues during lockdown period. Is he justified?
Sir, during lockdown up to 30th September 2020, there is a circular. No assessing officer can write a letter to the AO, or he cannot take any steps to coercive step to recover the deposit, recover the tax from the assessees. They are very clear. Up to 30th September, crores to get the money in Bangalore, who are liable to pay tax arrears, has not paid, but they are not taken any recovery steps at all. Now they started writing, but if they are done during a lockdown period, in some places lockdown is continuing, but up to September they are not. There is a circular, the press statement. You should not take any course administrative circular issued to all the officers. Don't write a letter for asking for the recovery of the amount. Don't write to bank. Don't take any course steps to recover this amount. It is that. But they know they can do it. Their duty is to recover the taxes, sir. That is a duty, and they have to do it. Please allow them to do it. Yes, sir.
Next, please use petition of last two cases. But we are sharing your PPT in upcoming 2 days, sir. It will be resolved in the KCA website. It will be hosted, sir.
Okay, please do it. No problem, sir. No problem. But you have to pay royalty to me. As a past president, I lost royalty now. Okay, good. You share with your website, no problem. Give it to them. But only thing is, sir, anybody is having any questions related to whether TDS or the cooperative, please share with me. I am in a position to give my views on any issues related to cooperative. I am very happy to share my views, definitely. But only thing is, when you call, if I am very busy, I will not lift the phone. That means that I'll call later. Don't be panic that say why you are not lifting. I'll call later and ask you that what is the issue. I will ask them. Rather, whether you mail it, you send me a message saying that you have mailed it. These are the issues. Kindly give your reviews. I definitely will give. Sir, friends, what happened is I want to share. I was addressing the Gulbarga Chartered Accountant Association before COVID. Gulbarga Chartered Accountant Association. First, I think when the branch was opened by Gulbarga, I was the first speaker on the branch, Gulbarga branch of SARC. I gave a lecture on TDS, tax deduction source. Gave a big lecture. Next day, one chartered accountant called me from Gulbarga. I said, sir, your presentation is beautiful, excellent. I told, thank you very much. Then he told, sir, my friend is not agreeing with your views. I told, what is his view? Then he told, it is a night 7 o'clock. Then he asked, what is the view? You give to your friend, I'll talk. I thought he's another chartered accountant. But he gave to some person, he is not clear, he was telling something I'm not in a position to understand. Then I told that friend, give to your friend, I'll talk. Then I asked the friend, who is the gentleman you are talking, he was raising any question? He told his income tax officer. And he is a person who is a TDS income tax officer in Gulbarga, he is raising it. I told him, this question is always what we say, he says is wrong. That is his first question. And then I told, sorry, 7 o'clock you are raising this type of question. Where are you? Then they told, sir, both are sitting in a wine bar shop. I told, don't sit in bar and raise a question on TDS. Enjoy your liquor. You call me tomorrow 11 o'clock. Whatever the issue is there, both together call me, I'll clarify. Friends, kindly note, I have not received any call after that. This doubt was only when they had a liquor, they had a doubt on TDS. But what I want to tell you is, if you have a really doubt, what is the clear doubt issue, please post to me. I am in a position to answer the whatever my view on that particular issue. That's what I want to share you. Also, I want to thank all the viewers for sharing. I hope all of you are safe and healthy. And I don't know how is the COVID-19 in Sagar, Sirsi, all the places, because I had to hear through only Sairam, Sriram, whether it is a okay or normal or below the normal or above the normal. These are all things. I'll wish all of you to be safe, healthy, no problem for any of our friends, charter accountants. Thank you. Thank you.
Over to you, sir.
Thank you, DRP sir, as we fondly call you, for
Yes.
enlightening all of us with the important provisions of taxation with regard to cooperatives.
Yes.
I think it was a thorough and comprehensive coverage of all the provisions, including COVID and case laws.
Yes, sir.
Sir, your skills to answering the questions as we go was really commendable, because I think that kept the participants be glued to the discussion, and that kept the entire session active and live.
Thank you.
Thank you for taking time from your schedule and enlightening and helping members to discharge their services, professional services.
Thank you.
Friends, I would request everyone to please keep a watch on the KSA website for the upcoming event. With this, we draw the today's program to close, and I wish everyone all the best. Thank you. Bye bye.